Okay, now you can have the class, the floor for the first presentation.
Doctor stay strong.
Thank you, yeah. Ya, Alhamdulillah. Ya, agaknya my daughter siap apa tahu? Menopause kot mama. Okay, all the best to you.
Okay, so can you all hear me?
Yes.
Can you all see the slide?
We can see the slide, but your voice tu macam ada pecah-pecah sikit.
My voice.
Sekat-sekat.
Sorry?
Better kot.
Is it clear now?
Tak payah, you try cakap banyak sikit lah.
Okay. Okay. So I will start the presentation. Okay. Assalamualaikum and good evening to Dr. Khadijah and my fellow online classmates. So today our group will be presenting on the limited liability partnership. So my group members consist of me, myself, Siti Nur Sakina, which will be the first presenter, Umi Shakina, our second presenter, and our third presenter will be Shafika Syukur, and Amira will be our last presenter. So I will start with what is a limited liability partnership. As you all know, a limited liability partnership is one of the type of a business entity.
Anyone
Sorry,
can
yes?
put that into slideshow?
Slideshow. Okay, is it in the slideshow mode now?
Yes.
Right. So I will start with what is a limited liability partnership. As you all know, a limited liability partnership is one of the type of a business entity that a person can do apart from sole proprietorship, private limited company, and so forth. So a limited liability partnership is actually the most tax efficient business that can be carried on in Malaysia. It overcomes the limitation of the sole proprietor or conventional partnership because the cost of compliance is low as the accounts are not required to be audited and no company secretary is required to be appointed. So what are the distinctive features of a limited liability partnership? Okay, under Section 3 in LLP Act 2012, limited liability partnership is a separate legal entity from their members. Okay, this means that any changes in the partners of a limited liability partnership shall not affect the existence, the right, or the liabilities of the limited liability partnership. Okay, so a limited liability partnership shall be capable of suing and being sued. They're also able to acquire, to own, to hold or to develop as well as to dispose any property. So and a limited liability partnership too shall do and suffer such act and things as bodies corporate may lawfully do and suffer, which means that if the limited liability partnership committed any wrongdoings and the law command them to do something or to do some act, so the limited liability partnership shall follow what the law has said lah. Okay, next. As you can see here, under section 21, subsection 5 in LLP Act 2012, mentioned that any obligation of a limited liability partnership is solely the obligation of the limited liability partnership. This means that a partner is not personally liable directly or indirectly towards the obligation of the limited liability partnership. It also said that a partner of a limited liability partnership shall not be liable of the wrongful act of any of the partner of the LLP. Okay. Lastly, the mutual rights and duties of a limited liability partnership will be governed by the limited liability partnership agreement itself. We can see here under section 9 in the LLP Act 2012, the LLP agreement shall be in the national language or English language and shall consist of the name of the LLP, the nature of the business, the amount of capital contribution by each partners, as well as the documentation stated that they have agreed to become partners to the LLP. Okay, so now let's move on to the resident status of a limited liability partnership. Okay, similar to a company, tax residence of a limited liability partnership in Malaysia is determined based on the place of management and control of its business. Management and control refer to the authority in deciding policies to be followed by a limited liability partnership. If at any time in the basis year for a year of assessment, at least one partners meeting is held in Malaysia in relation to the management and control of the limited liability partnership. The location of the trading activity or physical operation is not necessarily the place of the management and control, because a limited liability partnership that carries on trading activity in Malaysia is not resident in Malaysia, considered not resident in Malaysia if it is found that the commercial activities such as manufacturing, production and sales are controlled from the overseas. If the limited liability partnership held important meetings where important decisions are made overseas, that also will not be considered the resident status will not also be considered resident in Malaysia. Okay. So under the provision of the Income Tax Act 1967, Section A, subsection 1A, Section 8, subsection 1A, there are a few required documentation in order to determine the resident status of a business. So here we can see that a few documentation are needed, such as the articles and the memorandums of association, the constitution, the company's letterhead, the minutes of directors meeting, as well as the minutes of general meetings, because all this will show that where such meetings have been held. Okay, as the basis year of the limited liability partnership, a limited liability partnership businesses can have a basis period of either on 31st December or non-31st December. So as the comparison between a limited liability partnership and other business entity will be explained further by our next speaker, which is Umi Shakina. So I will pass the presentation for Umi to continue. Please, Umi.
Okay, thank you, Sakina. For comparison among LLP, partnership and company, limited liability have the liability is limited, but for partnership not limited, and the company is limited liability. For legal entity, the entity is legal, partnership no, and the company yes. Means the entity is have act. For perpetual succession, LLP have perpetual means the long term business have. For partnership no, and the company yes. For capital contribution, it must have agreement between the member. Partnership need agreement between a member and the company need a shares. For the amount of member LLP, it's between 2 and have no limit. For partnership, 2 until 20 among that. And for the company, 1 until no limit for means for sendirian berhad, that's member only 50. For berhad, there's no limit. For participation in management, they need an agreement for LLP and partnership. But for company, the participation in management need contribution from board of directors. Internal management rules, LLP can decide between member and also partnership, but for company, they need to refer Company Act 2016.
Okay,
Next.
Umi. Okay, can you go back to the earlier slide? What do you mean when you say that for LLP and partnership is based on agreement? What do you mean by that?
Sorry, can you repeat, Doctor?
So for example, under LLP and partnership, you have the capital contribution, participation in management and internal management rules. You put that as an agreement. So what do you mean by agreement here?
Oh, agreement between member, they need to decide together.
So when it comes to capital contribution, they have to refer to the agreement in the partnership itself lah, for example, is it? So it goes back to the agreement between the partners.
Yeah.
All right.
Okay. Next. Okay. Another features is the finance. Means the LLP have partner investment and they can borrow from bank, send goes to partnership. But for company, the finance can be from shareholder and also the capital market. For the returns, LLP can have share of profit. For partnership, share of dividend income. And for company, they have dividends for return. For taxability on return, LLP is exempt. Same goes to company. But for partnership, it is taxable. For dissolution by court order, I'm not sure about this. What we call if there is no agreement between partner, then court will decide.
Umi, sorry for interrupting, but can Sakina please mute your audio?
Oh, sorry.
Okay, for basis period, LLP will end by 31st December or not 31st December. And for partnership, it must 31st December. And LLP same to the company. It can be 31st December or not. For chargeable person, I'm not sure because I'm referring to book. Tax written from, this one. This one, that tax written form, LLP will use the form of PP. For partnership, they have two form, which is P for partnership, B for each partner. And form B, we already introduced by Doctor for this. And for company, it's called form C. For the tax rate, we can look at the book. First, 600,000 at 70%. excess at 24%. Partnership chargeable income not less than 2 million. The scale rate between 0 until 28%. For the flat rate, 30%. And for company, same to the LLP. Okay. Next.
Umi, what do you understand by the chargeable person just now?
Oh, I'm not sure, Doctor.
Okay, so chargeable person here means that the LLP itself is a chargeable person. So when you compute tax on the LLP, right? So you compute the tax, so the LLP itself will pay tax just like a company lah. Similarly, for example, you have company A Sdn Bhd, you compute the chargeable income of the company, right? So the company itself and the LLP is a chargeable person. When you look at a partnership, partnership itself too is not a chargeable person. So dia tak ada tax on the partnership. But you do the computation of the partnership in order to determine how much is the divisible income or the adjusted income of each partner in the partnership, then you assess on the partners. You see the difference? So that's why you say that partnership itself is not a chargeable person, but LLP and company is a chargeable person. You got it?
Oh. Okay.
Okay.
Okay. Okay. For conventional partnership or Sdn Bhd, they can convert into LLP. So conversion is defined to mean the business properties, interest, right, and privilege are transferred into LLP. Liabilities may or may not be transferred. It is very much depending on the business decision of the LLP partner. Means if they want to convert, the liability will not be transferred, and it depends on partner decision. Okay. Next. Okay, for the remuneration to partners under section 39 clause 1 clause N, the partners are distinguished from LLP with separate legal entity and identity. It is good for those who want to have business. The payment of salary to each partner is deductible to LLP and remains taxable as employment income for each partner. To be eligible for tax deduction, okay, the amount of salary must be clearly stated in the LLP agreement. Means they need an agreement between partners, what amounts of salary for each partner they want to allocate. Okay. Next, I will pass to Shafika.
Okay, next I will present about outstanding tax liabilities. Under Section 27 of Limited Liability Partnership Act 2012, it stated about the responsibility of the compliance officer. So, a limited liability partnership shall appoint at least one compliance officer from among its partner or person qualified to act as secretary under the Companies Act 1965. The compliance officer must be a citizen of the permanent resident of Malaysia and must be ordinarily reside in Malaysia. So, compliance officer must be responsible or answerable for doing of all acts, matters, and things that are required to be done by a LLP. he or she shall be personally liable to all penalties, including administrative penalty imposed on the LLP for any contravention of those sections unless he satisfied the court hearing the matter that he should not be so liable. The statutory duties of the compliance officer is to maintain accounts, submission of return to CCM, maintaining records of partners, particular information. So,
siapa present? Syafika. Sorry.
Ah.
This responsible person ni siapa ni? Any other
Compliance
person or you appoint another person?
Doctor, can you repeat the?
This the one that you're mentioning, this responsible to do all these things. Alright, apa dia ni? Who is
compliance
this person?
officer?
Oh, compliance officer. Who is appointed lah. Maknanya he's one of the staff of the LLP ke macam mana? Liable to
When I read the LPS,
Betul. I'm the one who was responsible to explain about the compliance officer.
Okay, alright. So later you akan explain ke apa?
Yes.
yes, Amira will explain.
Okay, tadi you ke yang tengah present? You ke
Tadi Syafika.
Saya.
Syafika present. Okay, Amira yang akan explain. Okay, you tell me.
Me.
Oh, so ada slide lain ke on compliance officer?
Ada.
Yes,
Okay, then skip. Okay, later Amira will answer that. Thank you.
Okay, in relation to income tax liabilities, Section 75B of the Act, however, held that all partners and compliance officers shall be jointly and severally liable. Next slide. Okay, this slide is about the preferential tax rate. Resident LLP in Malaysia, which has a total contribution of capital in cash or in kind of 2.5 million equal or less than at the beginning of the basis period for a year annual, and gross business income equal or less than 50 million for that year annual will be taxed at the following rate. So if the chargeable income is equal or less than 600,000, we will use 70% as the tax rate, and if for the excess, we use 24%. This rate is only applied provided the LLP does not own or owned by or commonly controlled by a company having paid out capital of more than 2.5 million. This tax rate takes effect from year annual 2020. Resident that does not fulfill this requirement, they should be taxed at 24% on the by LP is tax exempt in the hand of partners. So means that partners doesn't have to pay tax. It is tax exempt in the hand of partners. Next I will give Amira.
Assalamualaikum. I'm Amira Khanak Jafar. I will thank you, Syafika. I will continue for the real property gain. Okay, real property gain tax is a tax levied by the Inland Revenue Board, which is IRB on chargeable gains derived from the disposal of a real property. Can anyone hear me?
Yes, okay je.
Oh, okay. This tax is provided for the Real Property Gains Tax Act 1976, which is this tax is levied on the gains made from the difference between the disposal price and acquisition price. Okay, what is disposal price? The disposal price is the amount of money obtained from the disposal of any asset. while acquisition price of an asset is the amount or value of the consideration in money. Okay, RPGP regards LLP as a non-company. It has a separate legal entity, which is it can swing so apa sih? it can sue or being sued in its own capacity. Okay, as you see at the table, which is it is the RPG period between Sedenberhard and also LLP. Okay, Sedenberhard is the company. If it's within 2 years, for the LLP is 30. The rate is 30%. If in the 4 year, it is 20%. While if it's in 5th year, it is 15%, and last if in the 6th year and onwards, it is 5%. Okay, next slide. So next I will speak about the annual declaration. Okay, the annual declaration is can be the annual declaration, every LLP is required to launch an annual declaration with the LLP register, which is annually within 19 days from the end of the financial year of LLP. So the annual declaration can be submitted to the website www.myllp.com.my. Okay, who the people can submit the annual declaration is the compliance officer, which is I will explain in the next slide. Okay, the fee of the submission is RM 200 for measure. Okay, so what is the job scope of a compliance officer? Next slide. Okay, this is the compliance officer. The compliance officer is obligated to lodge the annual declaration, the LLP return, and changes in the LLP's particulars to the register via e-lodgement. Next, compliance officer can be appointed from one of the LLP partners or employees with effect from 28 December 2018. And approved company security can act as compliance officer for any LLP. Okay. Last, last is an approved company secretary means a Malaysian citizen having a permanent address in Malaysia who is approved by SSM to act as a secretary. Tak nak hide. Secretary.
Do you know that chartered accountant or professional accountant can also be a company secretary?
I don't know.
So now you know.
Okay.
It doesn't have to be it doesn't mean that you must be a secretary, right? Then to be a company secretary, all right? Accountants, certified accountants, it can also be a company secretary. Okay.
Okay. I think that's all from our group. Any question? No. Thank you.
All right. Thank you, group. Okay, let's have the next group. Okay, for before the other group presenting, prepare for the slide. Right, for this topic LLP, what is more important is that you should be able to identify or to differentiate between LLP, partnership, and a company. And remember that why we come up with the LLP, because there are issues with regard to the old partnership as well as with the individual, right? But why company wants to move from company to a LLP, so that is also we want to look into. right? We are very clear that of course LLP is better than partnership or the enterprise, right? But why company wants to move into LLP? So that one macam I have yet to see the advantages of moving from a company to a LLP, right? But maybe something that you can ponder upon lah. All right. So maybe next group is ready. E-commerce, right? Okay. You can have the floor. Okay, by right, e-commerce ni topik yang saya rasa macam banyak je nak tanya. Maybe in the exam.
So I will start the presentation now. Good morning to Dr. Khadija and all my friends. Today, Shim Jing Eun, Pang Jian Jun, and me will be presenting on the topic tax on e-commerce activities. So the IRBM has introduced the guideline on taxation of e-commerce on 1st of January 2013. However, with the involvement of the e-commerce transaction and the emerging of new business models, the new guideline was published on 2019 in order to provide some guidance on income tax treatment in respect of ECT. And there is no specific provision under the ITA 1967 governing ECT. That means that the current tax law and interpretation are applicable to determine taxability of this e-commerce transaction. And the RBM adopt the principle of neutrality as both ECT and conventional transactions are subject to the same tax treatment. Next. Digital currency is a digital representation of value which is recorded on a distributed digital ledger, whether cryptographically secure or otherwise, that functions as a medium of exchange and is interchangeable with any money, including through the crediting or debiting of an account. And the digital token is a digital representation which is recorded on a distributed digital ledger, whether cryptographically secure or otherwise. And ECT is any sales or purchase of goods or service conducted over any network by method specifically designed for the purpose of receiving or placing of orders. That goods or services are ordered by this online method, but the payment and the ultimate delivery do not have to be conducted online. That means that the customer can pick up at the physical store themselves. And an ECT can be between enterprise, households, individuals, government, and other public or private organizations. And royalty is any sum paid as consideration for the use of or the right to use copyright. I think this part someone has already explained it last week, so I think I will skip it. There are 6 types of e-commerce business models. The first one is online trading and service provider. It is the sales or purchase of goods service conducted over computer network by method specifically designed for the purpose of receiving or placing of orders. The provider will gather and analyze data on customers, provide personalized service, advertising, and manage logistics and supply store with products. And like just now, the payment do not have to be done online. The App Store is a type of digital distribution platform for software, and the customer can access this app store through their device. They can browse, view, purchase, and download and install this app like Netflix or Spotify on their phone.
Can you give an example the difference between the online service provider and the app stores?
The online service provider is like Shopee, Lazada, Zalora, and
So they
the
are
app,
the service provider. App
app
store?
store is the Netflix, Spotify. Is that correct?
I think so. I don't know. Okay, never mind. We'll see how. Because I think that macam Lazada, Shopee itu they are the, as you mentioned, it's a service provider. Alright, means that you do have the sellers that actually registered under them. Alright, and they are the one that actually taking the orders. Is it?
Yes.
How it works? I think so.
I think I can clarify this.
Yeah.
Actually, the Lazada and Shopee, they are the platform.
They are the platform.
Like for example, Spotify is a service provider because they're providing a service.
So they are the platform. So the service providers are the sellers.
Yes, because the platform Lazada, they don't directly sell any product to the customers, so they don't.
They prepare the platform. All right. Okay. Good.
Yeah.
Thank you, Tamil.
Okay. Online advertising use the internet as a medium to target and deliver marketing message to customers, and it is in the form of display ads and search engine ads. Normally, the company will conduct online advertising through Instagram or Facebook in the form of paid review. And the next one, cloud computing, is the provision of standardized, configurable, on-demand online computer services, which can include computing, storage, software, data management, using shared physical and virtual resources. The user can access the service by using various types of device like tablet, computer, smartphone, as long as they have internet connection. It is a cost-effective alternative to purchasing and maintaining customers' own IT infrastructure. Next, payment service is a type of payment where online transaction between online purchaser and seller. The customer can pay by using credit card, direct debit facilities, real-time bank transfer, or direct deposit. And other alternatives of payment methods are e-wallet, cyber wallet, and mobile payment solution. And some of the examples are the iPay ADX, MoPay, Boost, and Touch and Go. So the digital currency or token, and the mining and buying and selling is another type of business model. And that's all for me. I will pass to Chen Jun.
Okay, so for the scope of charge, we have learned before that income tax is imposed on the income which is derived from Malaysia. So any income in relation to e-commerce transaction is deemed to be derived from Malaysia if it is associated to any activities in Malaysia, regardless of whether that income is received in Malaysia or otherwise. A non-resident person who derives income from e-commerce transaction may also be deemed to derive their income from Malaysia in relation to special classes of income and royalty. This part will be further explained by the next presenter. So here is an example. Joyce is an active blogger in fashion through her social media accounts such as Instagram or Facebook. She gained more than 1 million followers in those platforms. Assuming that for year assessment 2017, Joyce received income from advertising product reviews of 4 million. That income is taxable under Section 4A of Income Tax Act 1967 as she is carrying on the activity by way of a profession. This is because, pursuant to Section 2 of Income Tax Act 1967, business is defined to include profession. So next, scope of tax liability for business. The factors to be considered in determining the carrying of business operations within Malaysia include the performance of contractual obligations, the location where contracts are formed, where services are performed, where goods are stored, and also delivery of the products. So in the context of e-commerce, business activities that may be considered in determination of business operations include sourcing of content, meaning where the source of information for a certain website. Next, procurement of goods, promotions, advertisements, updating and maintaining the website. Let's see an example for further understanding for this slide. So here is an example. N. Sendirian Berhad carries on a business of selling software in Malaysia. It has a website hosted on a server but located outside Malaysia. The website allows customers to identify products, answer queries on its products, order the products online, make payments for the purchase, download of the software in digitized format. However, all business activities of the company are carried on in Malaysia, which include procurement of software, supply of information for the website, the storage of software, the physical delivery of software, and also maintenance of the website. Therefore, income from selling of the software is deemed to be derived from Malaysia due to the substantial business operation in Malaysia regardless of the location of the server. So now I will pass to Xin.
So, under the scope of tax liability for special classes of income, firstly, I will explain what the special classes of income is. Under Section 4A of Income Tax Act 1967, special classes of income received by a non-resident person is subject to 10% tax in Malaysia, where withholding tax under Section 109E Income Tax Act. So under this section, there are 3 types of special incomes that has been introduced by previous group. So for this topic, I will just mention the second point, which any amount paid in consideration of any advice given or assistance or service rendered in connection with the management or administration of any scientific, industrial, or commercial undertaking, venture, project, or scheme in relation to e-commerce transaction, then it will classify as special income. So next slide. Next, there are 3 types of derivation of special classes of income shall be deemed to be derived from Malaysia if A, the responsibility for the payment lies with the government, a state government, or a local authority. B, the responsibility for the payment lies with a person who is resident in Malaysia for that past year. For example, a resident person having business operation in Malaysia set up a website in Malaysia such as Lazada, Shopee, as business operation of the person are substantially carried on in Malaysia, so the business income from e-commerce is deemed to be derived from Malaysia, and thus is subjected to income tax in Malaysia. C. The payment is charged as an outgoing or expense in the account of a business carried on in Malaysia. So it means a resident person having business operation in Malaysia set up a website outside the Malaysia, but it is still subjected to tax. So if you are not clear, we can look into the summary table. June. Okay. It's divided into the resident and non-resident part. So it can conclude that if the resident or non-resident has set up their business operation in Malaysia, it is subjected to income tax as the income derived from Malaysia. But need to be careful with the income derived from overseas branch. It will not subject to income tax, although the website hosted in Malaysia. So the next slide is about the non-resident. If set up in Malaysia, the business operation is subject to tax. But so next we will see the royalty.
Hold on. Can you go back? There's number 3 item here. Yeah, next slide. This here, it says that if, because non-resident, so mean that operation is overseas. But here, operation is in Malaysia, but website is in Malaysia also. Why is it under, derived from Malaysia? Yes. So kenapa non-resident ni apa maksud dia? Sini yes.
For the fourth one, the fourth row.
This one is the person is a non-resident.
Yes. The person is non-resident, but
then to see whether the income here is derived in Malaysia or not.
Yes, they will determine if derived from Malaysia is subjected, but if not, although they have branch or operation in Malaysia, will not subject.
So for example, on the third line here means that the company is a non-resident company, but the operation of business is overseas. It's only that the website is hosted in Malaysia. So the main you look at the operation outside Malaysia, therefore it's not derived in Malaysia.
Yes.
All right.
So for the scope of tax liability for royalty, what is the treatment for where the income from e-commerce of a non-resident is not deemed to be business income derived from Malaysia because the business operation is not carried on in Malaysia? So only the payment to the non-resident in the nature of royalty and deemed to be derived from Malaysia is subjected to withholding tax, which will fall under the scope of tax liability. Thus, any royalty paid to a non-resident in relation to e-commerce transaction will be subjected to withholding tax under Section 109 Income Tax Act. The term of royalty is defined under Income Tax Act 1967, include the payment for the use of the right to use copyright, know-how, means technical feasibility, or information concerning technical, industrial, commercial, or scientific knowledge, experience, or skill to a non-resident. Payment for the use of the right to use copyright or intangible products such as downloading of a digital product to a customer hard disk or similar media, and licensing arrangement to reproduce, modify, and adapt the essence of which would constitute an infringement of a copyright. Hence, a short reminder given, if the payment is for the right to use copyright, the income constitutes a royalty. On the other hand, if the payment is for the purchase of the product, the transaction would not result in royalty income. For example, OL Sendiri Berhad is a manufacturing company that uses accounting software for its financial reporting. On 2nd March 2020, the company purchased a software solution for UBS, which is the foreign company, for 70,000 ringgit, and on top of that, pay an annual licensing fee of 3,000 ringgit. Based on this fact, payment for the use of the right to use software is considered a royalty under Section 2 of Income Tax Act. Therefore, the payment of 70,000 ringgit and licensing fee of 3,000 ringgit is subject to withholding tax under Section 109. So next. So the income from e-commerce by a resident person is subjected to tax both in Malaysia and the foreign country. provision for relief is available and is relevant to the double tax agreement entered into by the government of Malaysia and the foreign country. So relief provision with double tax agreement, bilateral tax credit will be allowed, and the elimination of double taxation is subjected to the term and provision as stipulated in the agreement. So without the double tax agreement, a unilateral tax credit may be allowed, like compared with the half of the foreign tax, choose wherever the lower ones has been discussed by the previous group. So next, permanent establishment. So under a double tax agreement, the allocation of taxing right over business income between countries that are a partner to a tax treaty is based on the permanent establishment concept. It's defined as a fixed place of a business through which the business of an enterprise is wholly or partly carried on. For example, a non-resident person having business operation outside Malaysia set up a website in Malaysia. According Organization for Economic Cooperation and Development (OECD) commentary, a server at the disposal of a business, like owned or rented by it, can only constitute a permanent establishment of the business if the activity conducted through the server are not regarded as preparatory or auxiliary. Auxiliary has been explained by the previous group is like a supplement. For example, provide a communication link, much like a telephone line between supplier and customer, advertising of goods or services, gathering market data, and supplying information. So the commentary also states that a permanent establishment may be constituted even if no personnel of the business are required at the server location for the operation of the server. So that's all. Thank you.
Okay. All right. E-commerce. All right. Okay. What you have presented, of course, is on e-commerce, and you are more concentrated on the income received, for example, in the case of a non-resident person in the form of special class and royalty. All right. What you have presented is correct, but it's just that what I have in mind is that because I have a student, a master student doing a research on e-commerce in Malaysia. So the issue here under e-commerce is that e-commerce, who are these people? The seller, right? Can we refer those who sell online as e-commerce? Because if the activity is in Malaysia, right? I think that, does it fall under e-commerce? Then?
Doctor, are you referring this slide?
Yeah, I think so lah. Because if you're looking at here, for example, you're talking about a person who makes a lot of transaction, a lot of business, for example, especially now with the online, all these things. Do they automatically, of course, it's the performance, everything, the contract, everything is in Malaysia, right? So it falls under e-commerce, isn't it?
Yes.
The problem here, because we know that we have many e-commerce. What do we call them? This e-commerce owner, are they? I don't know. All right. So they have income, business income, but because they are not, they don't report that to Inland Revenue Board. All right. And the issue here is that we have a lot of e-commerce activities, but in terms of tax compliance, it's very low. Right, and it happened that my master student is actually Inland Revenue Board punya staff. So she is actually working on this e-commerce. So I do actually get the actual data, whereby we say that many people actually do not actually comply. All right, they may have their business registered, all right, but they don't actually submit their income tax file, for example, right? So the issue here is more on the non-compliance of the e-commerce, all right? But the other issue is that it's very difficult because they don't have a fixed business premises, all right? And they can work from anywhere. For example, now work from anywhere, WFA, all right? So they can make sales from any website, all these things, all right? So it's very difficult for us to actually tax them, yeah? And remember that they're making a lot actually, yeah? Especially if you take into account all this aggregate income from these online businesses. Yeah, but it's just that because how can we actually it's a problem, right? It's a problem because they don't comply. So how can we actually not help the government, but actually because it's a problem, it's a tax, yeah? So in other words, we see that as a problem where how can we actually reduce or improve the tax compliance level? How we can reduce, can we make them, of course we cannot because it's an obligation, but do we need a stick for them to comply, right? So I think that it's more of the understanding. For example, all right, if you're talking about withholding tax just now, right? For example, they may have to make payment to a non-resident person in respect of Section 4BA, in respect of special classes of income. It could be in form of royalty. But without knowing that they're actually paying to a non-resident person, paying for that purpose, they have to withhold tax. But many of them, I don't think, right, I think that most of them are not aware of their responsibilities of withholding tax. But not talking about a responsibility of withholding tax, but their own responsibility as a taxpayer when you are not aware, where they have to submit their tax returns, they have to pay tax, for example. So actually, moving forward, I do not know how we can actually improve this, help the government in terms of collecting tax from this. I would say that they are not underground economy, right? Because they are registered. I believe most of them are registered, except for those individuals like yang buat small delivery, home cookies, maybe they are not registered. But there are many more that are registered, right? So the concern is more on the compliance, and of course, in terms of the technicality when I talk about e-commerce. Yeah. So to be more practical, maybe you should consider how we can actually reduce this problem, or how we can solve the problem of non-compliance among e-commerce. Right? Maybe something that you can think about it. Right? Because I always look things that which is happening, all right, as a more applicable knowledge, all right, where you can actually apply those, right, and see whether are they supposed to pay tax in the first place. If yes, of course, you know what are the sections, for example, that provide for this. So yeah, all right. So at least in this presentation, a bit different because you look into the application of that on the special class of income and the royalty. Yeah. Yeah. Okay lah. Boleh lah. Cuma maybe but you have in the beginning on the introduction of what is e-commerce actually. Yeah, so that's very important to understand what it is first, then only look at the technicality of it. All right. So thank you to the group. All right. Well done. I hope that everyone benefit from the presentation as well. All right. So we have the next group. Thank you again. And we have the next group on double tax relief, is it? Or double tax? Something on double tax relief. Double tax relief. Ashraf, Shaza dengan Hanisa.
Do you see the slide? Hello.
Yes.
Then can we start it?
Yes.
Alright. Assalamualaikum and good evening everyone. Our group will present on double taxation agreement. My name is Hanisa Jensani and my group member Muhammad Ashraf and Syazatul Syafiqah. Next slide. Okay. Double taxation occur when the same income or earning are taxed twice by different tax authority. It occurs when a taxpayer is taxed in the taxpayer country of resident as well as in the country where the profits are generated. So due to this, a contract signed by both countries to avoid or minimize double taxation of the same income. It's called double taxation agreement. Next slide. Okay, this is the example of how the double taxation occur. Okay, I'm based in country A, do a business with a person resident in other country, country B. The profits gained to Ain is 100, which this 100 is subject to tax in country A because Ain is a resident in country A, and this 100 also subject to tax in country B because the income gains from country B. So assuming the country A has tax rates of 30%, while country B tax the income at 25%, so I will have to pay double tax of 55 ringgit. Next slide. Okay. So a double tax agreement, also known as double tax treaty and categorized as part of international taxation. Double taxation obviously discourages international trade. So country believe in benefit of international trade. They will try to provide a more conducive environment for cross-border trade by putting down rules to avoid or minimize double taxation. Next. Okay. Government for double taxation relief. Okay. Government has tried to reduce the burden of the taxpayer by providing them two types of relief under double taxation, unilateral relief and bilateral relief. It's important to note that in order to able to claim the relief under double taxation agreement, the individual must be a resident of one of the country that is party to the treaty. So in Malaysia, income other than resident company engaged in banking, insurance and sea or air transport derived from South outside Malaysia and received in Malaysia are tax exempted. Therefore, double tax relief only applicable for resident company engaged in banking, insurance, and sea or air transport, and the foreign income that considered derived from Malaysia and has suffered foreign tax. Next. Okay. This based on previous illustration one, which the Ain case, yang the profit of 100 ringgit profit when there is double taxation signed between the both country. So when you do the calculation, then the lastly Ain will pay only 30 ringgit instead of 55 ringgit in previous. Okay, next. Okay. As I mentioned before, under DTA, if the income remains taxable in both countries, relief given by way of credit known as bilateral credit, where there is no DTA between Malaysia and foreign country. So a person who is resident in Malaysia can claim unilateral credit. Next. Okay. This is the calculation on how to calculate the tax payable as we learned in our previous semester, the difference between the unilateral credit and bilateral credit, where the unilateral credit, you have to, in the steps number 3, you can see, you have to, times by the foreign tax time by 1 time half. While for the for the bilateral, you just take the amount of foreign tax. Next. Okay. Okay. Before any person or country want to enter transaction with treaty country, they should understand the OECD Model Convention. OECD stand for Organization for Economic Cooperation and Development, which a template contain the standard article and clause of double tax agreement. Each country will come to the negotiation with their list of conditions must have. Then the treaty signed. Therefore, the result of round of negotiation, compromise, and trade-off. Usually, a typical DTA contains of article which define these three scopes. The person entity to which is applied in Article 1, the tax cover, Article 2, and the territories to which the treaty expands, Article 29. Besides, they have to understand the OECD Model Convention. They also have to understand the concept used in the agreement. Next. Next. Acap. Okay. Moving on to the resident. Okay. In Model Convention, resident article is the most important because it determines the person who can claim the relief, the income allocation according to resident of taxpayer, also the reduced withholding tax rate only available to other contracting country. Alright. For the individual to determine their residency, we can do preferential test based on these 5. First, permanent home, where the person stay. Second, central of vital interest, where the person do their personal and economic relations. Third, habitual abode, where he stay more frequently. And fourth, nationality and mutual agreement. While for the company, we can determine based on their effective management, the place where the company actually manage, but not the place where important business decision of company taken. Next.
Okay, Hanisa.
Yes.
For this resident status for the individual, so it means that you don't have to refer to section 7, 1A, B, C, D, where you look at the 180 days, all that. Link to link by the 90 days. Tak pakai that one is not relevant here.
That one will explain by Shaza later.
Okay. Because these 5 items, the 5 tests ni based on what? OECD?
This.
Based on DTA ke apa?
Dia ada dalam artikel yang OECD tadi.
OECD.
Ya.
Okay.
Next. Okay, for dual residence, this example, in 2012, individual normally resident in country A may travel regularly to country B on business, such that he is considered a third resident of both country A and country B. Therefore, he is in dual residence situation. So based on Article 4 in OECD, the article has set the rules called the tiebreaker rules to resolve dual resident for purpose of application of treaty clause. The outcome will be that the individual be deemed to be a resident in one of the country for treaty Acap.
Okay. Hello everyone. Before I continue, allow me to stop sharing first. Wait. Right, this better. Sama je. Right, so okay lah. Alright. Hello everyone. Can you hear me?
Yes.
Alright. Okay. Sorry for that. Okay, let's just continue. I'm going to talk about residents and also permanent establishment. Actually, this already been discussed by Hanisa a bit and also by other groups. So I'm just going to skim through and give you guys the highlights of things that you guys need to consider important. So for residency, usually whenever a person is a resident of a country, it is supposed to determine by the domestic law of a country. However, there are situations where the person itself, both company or individual, to be recognized for dual residence, as Anissa already mentioned earlier, meaning that the person can be recognized as a Malaysian resident and also other residency. Some situation that we can take, like say that you are Malaysian, but then you stay for, let's say you stay in another country for a period of time to be considered as a resident in that country. So by the end of the year, you have that dual resident status. So under Article 4 resident, there's a tiebreaker rule where to resolve the dual residency in the purpose for the application of treaty clause. In the end, the outcome is to deem that individual will be deemed to be the resident in one of the country for the treaty purposes, meaning that by the end of the day for tax purposes, the person will only be taxed on that one country only. It's worth mentioning that the application of the dual resident only applies to the double taxation only. All right, so for the determination of the residence, the DTA would set out rules to eliminate dual residency through the application of preferential tests as stated by Hanisas, like permanent home, central of vital interest, habitual abode, nationality, and also mutual agreement. As for the companies, it will be determined based on the effective management, that is where the company is actually managed. So where the company is actually managed, say that if it's managed in Malaysia, then it will be taxes based on the Malaysia, meaning that it is that person has a residency in Malaysia. Okay, moving on to the important part, the permanent establishment. The fundamental principle for the DTA is that the business income, a person, individual, or a company from a country, for example, A, will be taxable in the other country if only he have PE in that country, in country B lah. So if that's the case, only the income attributable to such PE in the country B will be subjected to tax in the country B. Meaning that if there's a profit or a profit income from country B, so then that profit alone will be taxable to that country's tax lah. The important concept here is that in the double tax agreement, which means that the fixed place of business through which the business of an enterprise is wholly or partially created, meaning that to determine whether the company have a PE in that country, it must have a fixed place. The very important is that fixed place of business, meaning that there has to be some type of a building where the business daily activities being run through. Okay, so under here we have three circumstances: positive list, a negative list, and also an agency part. Basically what it does, a positive list gives you the circumstances where the person to be considered to have a PE in that country, while negative list is circumstances where the person is to not have a PE in that country. So under positive list, some of the circumstances is that that person must have a place of management, a branch, an office, factories, a workshop, natural resources, a building, and also farm plantation. Basically, that person, if he wanted to be recognized to have a PE in that country, must have this kind of circumstances, must have that fixed place. Whilst in negative list, as I said earlier, it is circumstances where that person to not be considered to have a PE, such as the use of facilities solely for storage, the maintenance of the stocks solely for storage, display, and delivery, maintenance of stocks, merchandise solely for another enterprise processing, maintenance, and also maintenance of face solely for the purpose of advertising. To make it much more clearer, this means that if the enterprise does in another country is only just purchasing, storing, delivering, or any business combination, just for preparation or auxiliary or just supporting the main business, it will not be considered to have a PE in that country. Then about agency PE is related to the agents of the companies. So in an event that there is an independent agent or sole agent is appointed by the foreign enterprise to market their product in Malaysia, then such appointment agent may establish PE if those agent who is regularly act on the company's behalf, who is vested with authorities to conclude contracts and habitual exercise such authority. Simply said that if the foreign company appointed someone, an agent, to market or run the business in Malaysia, and does the PE and does the agent do this three things, then the companies, also the agent, will establish a PE in that country. Okay. Lastly, it's about the DTA override income tax. This is just to give you an oversight view of what the DTA is. So under section 132, it provided that DTA has been should the DTA been entered and has started to take effect. So as long as DTA remain in force, the DTA shall have effect in relation to tax under this tax. Shall have effect in relation to tax under this act, notwithstanding any written law. This means that this principle has been repeatedly followed and reinforced by the court. It says that should there be any conflict between domestic laws and also the treaty will prevail. To make it simple, should the countries have a double tax agreement, any written law on a domestic part will not be applicable, and the treaty will take force first, meaning that the treaty will take the priority first. Thus, if a treaty provision accords for exclusion of tax, any domestic law that imposes tax must give way to the treaty. Okay, and I pass to the next presenter. Thank you.
Hello everyone, can everyone hear me?
Yes.
So hello everyone, Assalamualaikum warahmatullahi wabarakatuh, and my name is Shaza. I would like to thank my group mate Ashraf and Anissa for such great presentation. So I'm going to present 8.0, exemption of employment income, which is only goes for foreign employees who exercise employment working in Malaysia. It's said to have their employment income to be derived from Malaysia. Next slide. So for 8.1 is income to
yeah. How do I mute this? Because I don't see the mute. Yeah. All right. Wait, I'm trying to mute this.
The slide before this. Thank you. So for 8.1, you guys can look further on page 562, which is income tax exemption, is included in paragraph 21 and 22, Schedule 6. So this is, I just write it for you guys to see in the slide, but after this I would explain the, paragraph 21, number 1, number 2, number 3, according to examples. Ashraf, next slide. Okay, for number 1, for paragraph 21, number 1, for period or periods which together do not exceed 60 days in the basis year for YA calendar year basis. So the example is Chukang, an accountant from Soso Pte Limited in Singapore, was assigned to his Malaysian subsidiary Teluk Sdn Bhd in Kuala Lumpur to implement an accounting system. His presence in Malaysia in 2020 was as follows. So basically for number 1 is that firstly it cannot exceed 60 days and is included in basis year for YA, which is 2020. So we're going to see how many days he's been in Malaysia in the year 2020. Next slide. So basically, the total days he's in Malaysia is 57. So since there were only 57 days present in Malaysia, the employment income attributed to the period concerned was exempted from Malaysian income tax. Next slide. So for paragraph 21, number 2, for continuous period not exceeding 60 days, which overlaps the basis year for 2 successive YAs. The example is that Enki Hirokawa, a Japanese engineer, was seconded to Malaysia in year 2019 and 2020 for the following periods. So basically what happened in this situation is that for continuous period in 2 successive YAs, which is 2019 and 2020, And let's see whether Enki Hirokawa exceed the 60 days or not. Next slide. So basically, he do not exceed 60 days, but it's only 60 days for the total 2019 and 2020. So the employment for the period YA 2019 will be exempted, as well as the YA 2020. Next slide. So paragraph 21, number 3. For continuous period that exceeding 60 days, we overlap the basis year for 2 successive YAs and for period or periods, which together with the continuous period do not exceed 60 days. So, for example, is that John Wu works as a marketing manager in Hong Kong. His employer, HK Limited, seconded him to promote the products of the company to Malaysian market during the following periods. So what happened is that you can see the first period is 1st August 2019 until 15 August 2019. But what happened on the second period is according to the paragraph, paragraph 21, number 3, which is 20 December 2019 until the YA of 2020, 8 January 2020. Next slide. So what happened is that we total up, his period in Malaysia, and his days in Malaysia is only 54. So the employment income attributed to the period until 2019 will be exempted, as well as in the YA 2020. Next slide. 8.1.2, whether director is entitled to paragraph 21, Schedule 6 exemption, even though the director is in Malaysia for less than 60 days, the exemption is not available to him because it is the duty of the director to come to Malaysia, for example, to attend annual general meeting. Next slide. So I'm going to talk about double taxation relief. Next slide. So there are 2 methods of relieving the burden of double taxation, as been explained by Anissa on the first, presentation. Number 1 is bilateral credit, and number 2 is unilateral relief. Next. Next slide. Okay, so for bilateral credit, it's therefore either Malaysian tax payable times statutory income over total income, or foreign tax payable in respect of that foreign income, and we need to choose whichever is lower, as been explained by Hanisa. So as goes to YA 2004, the individual, trust, cooperative society, club, or trade association will be tax exempt on foreign source income received in Malaysia from outside Malaysia. Next, banking, shipping, insurance.
Dan Kazato,
Okay.
company tak ada ke ni exemption? Individual, trust, co-op and club. Company not exempted?
Kalau company yang saya baca dia untuk bilateral hanya untuk banking, shipping, insurance and air transport. So bilateral is relevant to that for industry.
Okay. Tapi maknanya if I have a company that derive income from, okay, my company is a retailing, right? It's non-visa lah. So I have received income from overseas. Is it taxable then?
Saya tak tahu lah, Dok. Saya baca yang dia kata banking tu.
Sebab I rasa macam ni. Remember we have that 2004, it actually includes company kat situ. Alright? The one that is excluded mean that the one that are not exempted is only the visa. So banking, insurance, shipping and airlines. So these 4 industry, diorang yang kena tax whatever income derive. So that's why their income, then you look into bilateral, unilateral. Sebab income diorang tu is taxable. But if other than visa, all income is exempted. Faham?
Oh, okay.
So that's why that exemption ke bilateral, unilateral ni hanya untuk visa. Sebab other than visa is exempted. So you don't have to compute. Right. Okay.
Terima kasih, Doktor. Faham. Next slide. So for the time limit, it's included in paragraph 9, schedule 7. Bilateral credit for YA has to be claimed within 2 years after the end of the YA. For example, a claim of bilateral relief for YA 2018 must make latest by 31st December 2020. Next slide. Unilateral credit. Okay. unilateral credit allowed in respect of any foreign income which is double tax, or 1/2 of the foreign tax payable in respect of the income which is double tax, which is already explained by Hanisa as well. And we need to choose whichever is the lower. Next slide. So for the time limit, unilateral credit have the same time limit as bilateral, which is need to be claimed within 2 years. And the example is that a claim of unitary relief for YA 2018 must be made latest by 31st December 2020. Next slide. This is the example. The example can be seen from page 567 on our textbook. So this is, I just write the question. So can we go to the next slide? This is also the question itself on page 567. And next, this is the unilateral tax credit. So what happened is that the Malaysian tax on branch income received in Malaysia, RM 100 ringgit.
I think that you have to go back to the question. You have to explain the scenario of the question. Then only.
Baca semua Dr.
This one ni, this one. This one you kena actually highlight lah. Okay, you ada income of ni. Then lepas tu dia nampak, ada tax for foreign, local tax berapa.
Okay. So firstly, Ship Ahoy Sdn Bhd is a resident company carrying on the business of sea transport activities in Malaysia for the year to 31st December 2020, and the following outcome is anticipated. So the statutory income is 3880, 3,880, but actually is 1,000 is already put there at M1,000. And from sea transport activities is 3,880. From activity of foreign branch is 160, and the dividends on share investment net of tax deducted XYZ Berhad, a Malaysian resident company. So from 1999, tax waive income is 240. For single-tier dividend is 750. Foreign companies is 510, and interest on loan is 120. Next slide. So the first one, the notes.
Kenapa interest on loan to negative? Is it expense or income?
I think expense good.
So that interest has to be deducted against what kalau expense? Foreign companies tu maksud dia apa? Dividend from foreign companies.
Dia dekat notes number 3. The next slide.
Okay.
So the company does the foreign investment of which dividend have been derived are not related to shipping business. So for if not related to shipping business, it need to use unilateral. Doktor kan?
Sekejap. I baru baca note nombor 1 ni ha. You ni bagi nombor 3 terus.
Oh, okay.
You nak orang follow kan you punya presentation. Okay. Suara tu I dah suka dah tu macam pembaca berita. Okay. It's not entitled to any tax exemption in respect of sea transport. Okay, so that's good. So bila dia kata no exemption, sebab sebenarnya actually there are 3 methods tau in terms of the tax relief ni. Dia ada exemption, ada tax deduction dengan tax credit. Bila you cakap pasal bilateral, unilateral tu, that is actually tax credit only. Dia ada lagi 2 method. Tax exemption.
Yang lagi 2 method, yang lagi tax credit tu yang contoh Heaven, Nirvana tu
betul.
Depan.
Yeah. So there are 3 methods. So bila you cakap pasal bilateral, unilateral, this is actually only under credit method. So exemption method ni maknanya the whole foreign tax tu is exempted. Tapi kalau tax deduction, dia another method lah. Alright. So in this case dia kata you are not given any exemption, so means that you have to pay tax lah on that transport activity, sea transport, and then the foreign branch is involved in non-shipping business in a country with which Malaysia does not have a double tax agreement. And then foreign investment, dividend have been derived are not related to the shipping business. Dividend are shown after deduction of 15%. They are derived from a country with which Malaysia has double tax agreement. The agreement give full credit for foreign tax and dividend income. It's anticipated that only 1/3 of the dividend will be remitted to Malaysia. So nanti you akan tengok the different treatment because you have the income from your sea activities. you ada income from your branch and now you ada income from your dividend. Alright, so dividend tak ada kena-mengena dengan C transport. So you see the tax treatment untuk these three types of income. And then the loan was taken from a local bank to buy shares in XYZ. So loan tadi tu loan interest lah, interest on loan. So dia deductible against your dividend. Tapi nanti you tengok dividend you macam mana. Is it taxable or not? Is taxable, then only you boleh tolak dia punya interest loan. But kalau dia final or exempted, then you cannot deduct lah the loan. Okay, let's see the answer.
The second last slide. The total. Okay.
Ni. So, foreign branch income received in Malaysia, 100. Apa macam mana dapat tu
Yang foreign branch income received in Malaysia. Sekejap, saya dah terblank pula doktor kejap
I pun blank juga. Okay, lagi lambat dia blank. I selalu blank.
Yang 160 tu, 160 from activity of foreign branch times half. Sebab, kejap.
So total income from foreign branch is 880,000. Betul?
Bukan. 160 tadi bahagi sebab dia kata only half of the profit after tax will be remitted to Malaysia.
Ini jawapan dia ke ni? Jawapan betul ke ni?
Dekat page 568. Saya ikut textbook yang doktor kata Nirvana semua tu bukan 9.0, dia dekat bahagian subtopik depan.
Oh okay, itu betul. Itu kat depan, ini kat belakang Okay, tak apa. Tengok dulu. Foreign branch income received in Malaysia is 100. Malaysian dividend is exempt because single government dia tadi kan, tax waive tu kan. Interest expense 120, so nampak tak? Dia punya bakal, because the interest expense is deductible against your dividend. Tapi because dividend is exempted, so the interest is actually disregarded lah. So you tak boleh tolak pun lah, you tak adalah minus 120 dekat total kat situ, tak ada. So dia disregarded. Okay, so that's why dia nil kat situ. Foreign dividend, alright, foreign dividend dia ambil balik. Ni tahun bila YA 2020 ke ni? Income ni. Unilateral tax credit, bilateral credit, net income tax payable. But kalau I buat
patutnya saya guna contoh yang Nirvana semua tu ke doktor?
Tak apa, boleh juga. It's okay sebab I pun tak pernah tengok detail. This example, selalu I tengok yang Nirvana sana tu.
Saya ada tengok doktor explain yang Nirvana tu, yang ni tak.
Sebab what I'm confused now, for me is a foreign dividend ni sepatutnya exempt sebab dia foreign income. Even though received by C company lah.
Itu saya pun confused yang dividend tu dok.
Tu I cakap ni tahun bila punya ni, ikut masa ni tahun ni tak exempt ke? And then and then foreign branch income tu is nothing to do with shipping kan?
Foreign branch income tak ada.
Okay,
so dia guna unilateral sebab dia tak ada doesn't have double taxation agreement.
Itulah, tapi sebab the nature of the income tu, adakah just because you are shipping company, whatever income derived by the company is taxable? Kalau if that is so, if the principle is as long as you are visa, banking, insurance, shipping and airlines, so whatever income is taxable.
Okay.
Okay, cumanya sekarang ni sebab I was in the understanding that only income from the shipping, from the activities je yang not exempted. Other income should be apa you cakap tadi? For example, you're talking about C shipping company kan? So shipping activity je lah taxable. Other income, for example, dividend and foreign branch, alright, all this should be exempted. So itu yang I rasa macam
Patutnya doktor kalau ikutkan yang tadi tu memang patutnya banking, shipping itu je kan yang kira. So bila saya tengok textbook pun saya jadi pening yang dividen tu. Tapi saya takut saya yang salah jadi saya ikut je.
Tapi tak apa, I will check further on these two item. Alright, the income from the foreign branch dengan foreign dividends tu. Itu yang macam okay, tak apa. Okay, the issue here macam ni tau. Okay, class. Alright, we know that BISA income is taxable whatever derived. Alright, it's just that my understanding income should only be from the one that is taxable only from the activities lah. Talking about shipping activities, airlines. Tapi I was not aware that as long as you are BISA, all income is taxable. So in this example, it's assumed that all income of BISA is taxable. Right? And then they give you whether it's a unilateral or bilateral. Do you have the computation of the unilateral and bilateral?
The slide before.
Cik tengok. Macam mana nak kira unilateral dengan bilateral tu?
Ashraf, pergi slide yang sebelum.
Malaysian tax on foreign income. Malaysian tax on branch income received in Malaysia 24. Foreign tax on branch income 10. Relief is the whichever is lower. Okay, foreign tax on branch income. Ini unilateral kan? Yang tadi tu. Apa dia tak ada half tu? Bukan unilateral ada half. Foreign tax tu. Lah, limited to half. Limited to half.
Sekejap tu.
You jangan risau, dia orang yang senyap-senyap tu kan tak faham juga.
Tak, saya pun. Sebab saya dah pening dah doktor masa saya tengok ni mula-mula kata just 4 industri tu, lepas tu dia kata no shipping tapi dia kira juga.
You macam I lah kan. So you macam label I lah sekarang ni maknanya. Okay tu.
Tapi saya faham yang Nirvana tu saya faham tapi tu bukan 9.0 jadi saya terpaksa ambil example ni juga. Saya fikir macam tu.
Something that I have to ponder. I have to look further. It's okay. Tak apa. Nanti I check balik nanti. Cuma berapa foreign tax saya bayar? 20. Oh ni 10 ni dah limited to half lah ya. 120% is 20. Half dia 10 lah.
Saya dah terkejut dah tadi doktor cakap saya dah hilang dah segalanya.
Mana punya member? Mana Ashraf dengan Hanisa ni? Kan kita
Saya dah takut sangat dah.
Sian dia, nanti dia nangis tau. Nanti dia depressed. Jangan depressed macam I. Relax. Okay, tak apa. Syazah, you are okay. You are doing okay. Okay, really the lower. So sebab I tanya dia 10 tu I tak nampak punya 20% kat situ. Okay. So that's why dia half. So dia memang dah kira tu unilateral dah half dah. Okay, and then that one is bilateral. Bilateral mana?
Bilateral seterusnya.
Okay, Malaysian tax 48. Macam dapat 48? 200 times by 24. So nanti student lain tu kan tahu. Kan tak tahu. Foreign tax, see 200 at 15% is berapa? 30 kan? 30. So bilateral dia tak ada half, dia terus ambil 30 je. So whichever is lower is the 30. So that's how you get the unilateral 10, bilateral 30. This working, you all kena show me. Macam mana you dapat amount of unilateral and bilateral. Okay, next. So that's why you dapat income tax payable is 1003. Assuming this answer lah. 1003 is 4180 times by 24%. And then you minus unilateral, you minus bilateral, then net income is only 963. Dapat let's say 40,000. Okay, next.
Okay.
Thank you.
Okay. Thank you. Doktor, saya nak tanya. Sebenarnya contoh tu, saya perasan contoh yang Nirvana tu saya faham sebab ada 3 cara. Tapi yang memang yang contoh yang ni, untuk 9.0 ni memang itu yang dalam textbook. Tapi saya dah tak faham dah sebab dia non shipping pun dia pergi kira juga.
Tak apa, nanti I check further.
Okay.
Next class I akan share benda ni.
Okay, thank you.
Alright, okay.
Maafkan saya doktor, saya tak tahu.
It's okay, it's good. Alright. Kalau tidak dia orang dah tidur dah. Tengok dia orang tidur ke tak? You know.
Saya dah takut sangat, dah hilang dah idea saya.
But it's okay. It's good also. It's a eye opener for me also lah. Nanti I check further, right? Because I can't give the answer now. Because all this while my understanding is the other one. Okay. So I will check that further. Other than that, I think that is good. Cumanya you have to highlight, remember that in the textbook, there actually method of relief ni ada 3. One is exemption, one is credit, the other one is tax deduction. So if you look into the example, heaven, paradise dengan, kita nak pergi heaven, paradise dengan satu lagi mana? Dia 3 tempat.
Heaven, paradise, nirvana.
Nirvana, I tak nak pergi nirvana.
Lepas tu soalan dia kena pilih company tu patut
which one
untuk
tengok tax exposure lah.
Yang mana satu paling bagus.
Is quite straightforward, alright? But that that part, the example tells you that there are 3 methods. But then later it's more concentrated on the bilateral or unilateral. Bila bilateral unilateral tu maknanya you akan pakai method tax credit lah. Alright, maknanya dia bagi credit on the tax paid on the foreign income.
Jadi doktor maksudnya yang example saya ambil ni salah ke macam mana?
Betul. Cumanya I tak sure income tu yang dividend income tu whether it's subject to tax or not. Itu je. Example tu betul. Method
kalau maksudnya kalau doktor bagi soalan pun sebab ni masuk final kan, kalau doktor bagi soalan pun akan jadi contoh macam Nirvana, Heaven dengan Paradise tu ke, atau sebab yang tu akan pilih kan, 3-3 kita kena tahu 3-3 method.
Tak tahu, dia soalan tak buat lagi. I can tell you the question now.
Saya dah risau dah doktor, saya dah takut salah ajar ni. Saya
jangan. Relax. Okay, solutionnya I'll check further and then I will inform in the next class.
Okay, boleh.
So relax. Close dah buat hari ni. Yeah?
Okay.
So what about others? Are you sleeping or are you aware of it or not? What are the things that we are discussing now?
Doctor.
Yes.
Meaning the tax, the company will be taxed at only one country je lah kan, the summary.
Tak. Depends lah. Kalau you cakap exemption, method exemption, then the tax will be exempted in the foreign tax is exempted. Faham? Tapi kalau pakai kredit, maknanya you still have to pay taxes. Cuma you are given credit lah. I bagi you some kind of credit against your tax liability. Nampak tak? So how you calculate the credit? Credit tu kena pakai lah formula bilateral atau unilateral tu. Itu namanya credit. So credit is against your tax liability.
Faham.
Tapi kalau deduction, the amount of tax that you pay outside Malaysia, foreign tax tu is given as a deduction. So that is less lah, maknanya implication dia slow lah because that is given as a deduction. Kalau credit given against tax liability, so impact dia tu besar. That's why kalau compare credit dengan tax deduction, you not go for tax credit because that will give you higher tax. Higher tax credit means that lower tax lah overall. But of course, given an option, I want to go for tax exemption whereby I have to pay tax in both countries, you know. I have to pay tax in country A, I have to pay tax in country B. Cumanya sekarang ni because you are, katalah you are Malaysia resident kan, you have to of course you have to pay tax in country Malaysia. But at the same time, you kena bayar tax dekat Australia. Cumanya sekarang ni, tax yang you bayar in Australia, can you get exemption? Sebab kalau tidak, Malaysia pun kata okay because you are visa, whatever income you have to pay to Malaysia. So you bayar kat Malaysia. Tapi you kena bayar dekat Australia juga sebab Australia kata, you income derived in Australia, you have to pay tax in Australia. Nampak tak? Okay, so katalah you bayar kat Malaysia 20, you bayar dekat Australia 30, contoh. Ya. So total tax you bayar sekarang ni berapa? 50. 20 plus 30, total 50. So kalau tak ada tax relief, total tax you bayar 50. So what happened now is that you nak dapatkan relief. How can you get a relief? So that's how you tengok whether you can get exemption, can you get a credit, or can you get a tax deduction on your foreign tax kat sini ni. On your tax that you bayar kat Australia ni. Kalau Malaysia nak assess juga tax ni. So dah tentu, alright, business in Malaysia you kena bayar 30 tadi. 20 sorry. So income yang dapat kat Australia ni, you kena bayar kat Malaysia. Kenapa?
Sebab kita base kat Malaysia?
Tak. Sebab kita visa sekarang ni, visa. Insurance shipping airlines. So wherever income derived is taxed in Malaysia. Yang you bayar kat Malaysia ni is on tax on income in Malaysia. Faham? Katalah pasal AirAsia lah. Right? AirAsia income kat Malaysia ada tak? Ada. Dia derive income kat Malaysia. Tapi at the same time, dia pergi Australia, dia derive income in Australia. So Malaysia tax income that derived in Malaysia, but Malaysia also tax income which is derived in Australia. Why?
Sebab dia ada dekat dua-dua negara.
Sebab for these airlines, wherever income derived, tax in Malaysia. Okay. So sekarang ni, you akan tax this company. At the same time, company airlines Malaysia ni, apa nama dia tadi? AirAsia. Dia kena bayar tax dekat Australia juga. Sebab apa? Australia kata, you buat income dekat, you generate income dekat I punya country, you have to pay tax in my country lah. You see that? So sekarang same company bayar dua tax on the same income. Income mana yang bayar dua ni? Income kat Australia. Dia kena bayar kat Malaysia, dia kena bayar dekat Australia juga. So the one that you nak minta credit or nak minta exemption or nak minta relief ni is income from Australia ni. Boleh tak kalau I cakap exemption, I cakap okay, kalau exemption maknanya whatever income tax yang I bayar dekat Australia will be exempted from Malaysia. I don't have to pay tax. Why? Because walaupun sepatutnya kena bayar, but because it's exemption, then I don't have to pay tax on that. But kalau credit means that I have to pay tax both in Malaysia and Australia, but whatever tax yang I pay in Australia will be given a credit against my total tax liability in Malaysia.
Oh, faham?
Penat nak terangkan ni.
Sorry doktor, faham.
Okay, I faham. Ramai orang macam tak nampak benda ni. Okay, how many of you nak tengok sikit siapa yang actually faham sikit apa yang cakap ni?
Saya.
Ada impact tak I cakap nak pecah suara ni
Faham doktor.
Faham doktor.
How? Sebab sekarang ni cakap pasal visa. Visa ni patutnya, okay, in general, okay, section 3 kata income derived in Malaysia. So maknanya kalau derive Malaysia, dia tax kat Malaysia. Kan? Tapi kita kena take into account ada sektor, some industry, visa ni, income dia bukan kat Malaysia je. Income dia wherever is a world scope income. Because the income is derived from everywhere. So kalau dia Malaysian company, kalau a government do not tax this company, rugilah kita. Right? Because we're supposed to get more tax from this company because they derive income everywhere, not only in Malaysia. So that's why they give the exemption excluding visa. Exemption apa? Foreign source income is exempted except visa industry, visa sector. Right? Sebab maknanya katalah normal company, company sendirian berhad in Malaysia, ada investment dekat overseas, ada receive dividend. So the dividend income received by the company here is exempted because it's a foreign income. Tapi if happen that this sendirian berhad ni is a visa, right? Any visa lah. So now I nampak. Kalau visa, dividend dia maybe is not exempted. Tu I kena check balik tu. I was looking at kalau dia visa, the one taxable is only dia punya main activity. So kalau dividend dia, interest dia, is it taxable or not? So that's my issue now. So I have to check further. So kalau based on the presentation just now, as a Malaysian company, visa, alright, its income is wherever derived. So income that you refer here, not only income of your main business activity, but all other income, dividend, interest, all that is taxable in Malaysia. Right?
Oh.
So that itu yang isunya sekarang bila Syazah present tadi. So because my understanding, the one taxable is only the main business. Tapi sekarang ni kita tengok example tu, dia kata dividend pun, interest pun kena tax. Itu yang I nak kena check further. Faham?
Faham.
So yang kredit tu because of the income yang dia terima kepada overseas tu lah. Kan? Because income tu receive in overseas. Dividend tu from overseas. Interest tadi tak ada kan? Branch income. Kan? Branch income from overseas. So in this case dia kena bayar tax dekat sana juga. Dekat foreign country dia kena bayar tax. Yang 20%, 30% tadi. So that's how you want to see. Nak bagi kredit ke? Of course dalam ni memang clearly it say that it's a credit method. Cumanya bila you credit, you nak bagi bilateral ke unilateral? Then depends. Kalau ada DTA, you bagi bilateral. Kalau tak ada DTA, you bagi unilateral. So that's how you actually apply all these things into one.
Faham, Doktor?
Bagus. Apa tak faham boleh tanya Damia. Alright, I think that the group I presented well, alright. It's also an eye-opener to me. Right, I just want to double check again. Kalau betul, then means that if correct, then it means that for BISA, whatever income lah, not only for main business, but also other income is subject to tax. Okay, so I think, lamanya kita tak, kita still recording ya. Okay, anything else? Okay, sekarang dah pukul berapa? Okay, dah 5:59 dah. So we have how many more presentation to go? Yeah, I stop recording jap.